What's going on YouTube? It's your boy the BW Trader and welcome to my YouTube channel. In this video, I'm going to be giving you the weekly forecast for the coming week. So let's first dive into AUDJPY. So with AUDJPY, I'm going to go full screen. This pair is the same pair that I have. If you have not checked the My Forex Fund series episode 1, go ahead and check it. Leave a like, comment down below if you like the content, and most importantly, enjoy the free forex knowledge that I am dropping. Subscribe if you like the content. Comment down below with new video ideas for you that you would like me to drop. And let's go ahead and see what's happening here. So market structure 101, right? Whenever we have an impulsive move to the downside, as I have said on the previous video, and we correct with an ascending manner like that, we expect the market will potentially impulse to the downside. So this is exactly what is happening here. I'm elaborating this because I see it's happening on AUDJPY. We had our first impulsive move. Now we were corrective and we seem to have broken out of this correction. Right, so let's dive in deep to a more smaller time frame. Let's go to the 4-hour to see exactly what's currently happening. Okay, this is a correction, but the reason why I'm pulling this trend line back is I also notice that we have a potential expanding here, an expanding structure. The market has built up an expanding structure. So the reason why I don't want to forget that the market is in an expanding structure here is because the thing with expanding structures, yes, there are corrections and there are at times potential continuation corrections, but also you never know when the expanding structure is done. So that means there's still potential for us to come here and bounce back to the upside of the expanding structure. So there's only one thing that for me is going to give me a clear identification, a clear idea of where AUDJPY is going to go to. If I get a correction in this manner, then I would know that we are clearly now no longer going to keep on bouncing up and down in an expanding structure, and we're going to continue to the downside with the overall impulsive move. My first target will be this inflection point, another inflection point there. This will be my overall target, and I would have to wait patiently to see what happens around this level for me to catch such moves. Now one other important factor to look into is, just because we see on the daily chart that we are having an impulse, a bear flag, does not mean we are only going to look to capitalize on sells. We can also capitalize on potential moves to the upside if the market does not break out of this expanding structure. If the market gives me a descending structure, then I will not mind entering buys and getting out at this here level, which is now also an inflection point. So I don't use support and resistance, but rather I look at the most recent areas where the market found momentum, and I use those levels as inflection points and areas of potential influence on the market. I look them as areas of potential influence on the market. These areas are potentially going to influence what the market will do once price reaches this area again. Now the other thing, as I pick up my inflection points, what I like to do is I pick the most recent inflection points. I don't go all the way back to identify those levels, because those levels are now no longer important to what the market is doing currently. So I pick the most current inflection points. If you would like to see a whole video of the strategy breakdown, comment down below and I'll drop a video of such. For now, let's focus on what we are going to. Moving on to the next pair, let us look at USD Swiss franc. USD Swiss franc. Now on USDCHF, on the daily chart, we can clearly see that the market is forming more of a descending here. We're having a little bit of a descent nature to price action there at that zone. Potential impulse correction, potential impulsive move to the upside. Does not mean we are going to get the full impulsive move to the upside, but as I have said previously on the previous video, I do not trade the market with such a perspective. I have a long-term perspective, yes, with my risk management approach, but I do not want to catch the whole move to the upside. I am a day trader and I'm trading prop firm challenge accounts, and I'm trading live on prop firms, and prop firms have a lot of rules. For example, I cannot afford to hold this trade long-term on my forex funds because I might find that I have now violated the maximum daily drawdown, because their maximum daily drawdown is based on equity, is equity based. So I would like to capitalize on small moves, a small move to here, take my profit, wait for another confirmation, and then enter again. So let's go in deep to the 4 hour to see exactly what the market is showing me. Okay, so this is clearly what the market is doing here. You went to the up for rejections, so we are clearly constantly finding support at this level. I see USDCHF as a potential move back to that level. My inflection points in this here would be this area. That's an important level for me. The most recent low. Those are the two most important levels for me on USD Swiss franc. Now, what do I think the market is going to do? For me to confirm, currently I am looking at potential buys, but I am not fully biased to say the market is going to be buying. So I would rather wait for confirmation, a descending structure, after, because we have clearly had an impulsive move to the downside. This is an impulse. It's a clear move that shows that the direction is with the bears. Now I would like the market to give me a correction, a descending, and then that's when I can confirm that the market might potentially be moving to the upside. So once the market gives us a descending structure during the week, that's where we can start preparing our buys. For now, we are going to rather let the market play out, give us structure, because it's clearly now in a correction. The market is clearly now correcting. So we'll rather let the correction show us the next potential impulse, where the next potential impulse is going to go. So wait patiently to see what the market is going to do at this level, whether we are going to correct like that, give you more of an ascending nature, which would indicate that we could potentially impulse down, or whether it gives you a descending nature, which indicates that we could potentially be moving to the upside. So be unbiased on USDCHF. I am unbiased on USDCHF for the week until it confirms to me with a correction where the next impulse is going to be headed. Moving on to the next one, the next pair is going to be New Zealand CAD, the Kiwi CAD, the Kiwi Canadian dollar. Let's see exactly what I'm supposed to be looking at here. Go back to the daily chart. When you're on the daily chart, you can notice something very, very simple. The market is having this little area as a descent. You can see that the market has been descending to the downside. Call it a downtrend, call it a descending channel, whatever you want to call it, the market is moving to the downside. That is clearly what we are seeing. Now let's go in depth to the 4 hour and see look at deeper price action to tell what is currently happening. Now, if you are only here to identify correction levels, you can clearly see the market had an impulsive move, corrected, then impulse to the downside. After this impulsive move, we corrected to the downside. Now, this here brings about another important thing about market structure that you may need to learn or you may already know of. Just because market is forming this small correction levels does not necessarily mean the market is going to clearly push to the upside. The market could be forming these levels as part of an evolving pattern. What I mean by an evolving pattern is this thing here. As you can see that these highs are clearly connectable and these lows are clearly connectable. So just because the market had given us this does not mean the market is going to push all the way down, and just because it gave us this does not mean it's going to push all the way there. But rather what the market decided to do is give us a bigger descending structure inside of an overall descending structure to show us that there's a high probability that we push to the upside. Are we pushing immediately after this descending? No, because now we are caught in a bigger structure. Now we are caught in a bigger structure. So we would have to wait patiently. But NZD Canadian dollar, I call potential buys on this one. I am very, very biased on buys. I'm looking for buys on NZD Canadian dollar. You can either take the buys as the market comes here, gives you a double bottom, or you can wait for this double bottom to be broken, because that is what the market tends to do. It breaks the lows to get support and resistance traders thinking we are now potentially going to give you a retest and go to the downside. But after breaking these lows, you would realize that it just gave you first, second, and when it comes back, it's going to give you the third touch. And then that is where the impulse on this comes from. For a reduced risk entry, you can take your buys at the break of this line here. Your stop loss can be below the potential double bottom area, below the inflection point, and your overall target can be that level on Kiwi Canadian dollar. That's what you can be looking for. That's what I'll be looking for this week on New Zealand CAD. Now let's go on to the most important pairs that I trade. That is the two indices, US30 and German 30. US30 and NASDAQ, I mean to say. I'm no longer trading German 30 because the chart work on German 30 in my forex funds is not really clear. It doesn't make sense to me. So let's go to the daily chart and see what's happening on US30. So on US30 on the daily chart, we all know that US30 and NASDAQ are always in an uptrend. They spend the majority of the time moving to the upside. That is something that by now, if you're a US30 trader, you should be aware of. You should know that the market is spending most of the time impulsing to the upside. So overall, we are in an uptrend. But what is happening currently? The market tends to push to the upside, give a breather, impulse, breathe, impulse. But what is currently happening? The current zone that we are in, you'll realize that it looks, when you go in deep, diving in deep to the 4 hour, because what you're doing here is called the multi-time frame analysis. So you'll realize that we are building what looks more and more like a bear flag. It's an ascending structure after a move to the downside. After a move to the downside, we are having an ascending structure. Therefore, we look for potential moves. Overall, because of the structure, we look for potential moves to the downside. But that does not mean the potential moves to the downside are going to come this week. For us to see what is going to happen this week, we have to dive in depth to see exactly what the market structure says. For example, we can clearly see that this area here is a correction. It is not an impulse, because the market moves in two phases. It is either impulsing or correcting. So we can clearly see that this area here, it is directionless. We are neither going up nor are we going down with a clear direction. So we are in a correction level here. So this correction level is clearly to the downside. Therefore, it looks something like that as a descending structure. It has a descent to it. It's a descent in nature. That is what I see here on US30. So US30 has such a structure, an impulsive move, a correction to the downside. Therefore, on a lower time frame analysis, you can see that we have a potential impulsive move to the upside. So we could get this impulsive move to the upside before we get the overall impulsive move to the downside. Now going in depth to the 1 hour to see exactly what the price action is saying. Okay, so when you dive in deep, you'll realize that we have this level, clear price structure, impulsive move to the downside, but there's also potential that this and that forms an evolving pattern. There's potential that we are forming an evolving pattern with it as a descending structure, and we could then pull back for a push back to the upside. But I cannot confirm that this is a descending structure just yet until the market confirms the level by rejecting at this level. If the market can turn around from this level, come back here, then it would have confirmed for me that we are now fully in a descending structure. And at the break of this descending structure, I would take buys with that as my first target, because that is my first area of inflection, my first inflection level, and that will be my second. This is my current low. So you can either call these levels your daily highs and daily lows, or you can call them your inflection points. That is what I am looking at potentially for US30 this week. Keeping the charts clean, not too many lines on it, not too many horizontal levels, just 3 to 4 levels for the week that I'll be looking at. Now going on to NASDAQ. NAS 100, what am I expecting to happen? What am I seeing on NASDAQ? What is the price action? As I said when I was opening a US30 chart, we are always in an uptrend. One thing I have learned is we are always in an uptrend on this pair. It might look like we are breaking, but if you zoom in here, you'll realize that the market keeps on failing to close below this level. It keeps on failing to close. The candlestick bodies keep on closing back on the inside of the uptrend. So the uptrend is still holding as far as now is concerned. And then you may connect these highs also to see the current market price. Okay, so overall we can see that NASDAQ is in an uptrend. As I have said, it is always in an ascending structure. Now we need to be aware of what the market is doing here. Clearly we know that we have previously had an impulsive move, so this is clearly a correction level. We are in a correction phase here because we are directionless. We are neither going up nor going down. So whenever the market is doing something like that, it is clearly correcting, unless it is in a consolidation, that is. So when you try to read the market structure from this, connect this here. So to avoid, I hate it when the market, my lines keep on crossing like this. So to avoid that, I tend to move this a little bit to the back, give the market, give the current levels space, and maybe do something like that. So the top, we might have something like this. So you can see that the market is currently on an impulsive move, correction to the downside, potential impulsive move to the upside on Nasdaq. That is what Nasdaq looks like. So diving in depth, go to your 4-hour and see what is happening. So on the 4-hour, you cannot really tell whether the market is trying to form a bear flag here, a yam bear flag at this level, or not. So for now, as far as now is concerned, on Nasdaq, I'll rather leave Nasdaq alone for the week, unless it gives me a decent structure. I may capitalize on a small move to this level and wait for this level to confirm to me that the market is indeed respecting it. Then I may take sales. But as far as now is concerned, I'm going to remain unbiased on NAS 100 and leave Nasdaq alone for the week. I clearly see that. But we will see as the week progresses what type of market structure we get from NAS 100. As far as now is concerned, I do not see an entry criteria being met for my strategy on Nasdaq, and I would rather let Nasdaq continue playing out to give me better market structure. So that is the video on full weekly forecast for the week ahead. If you like such content, drop a like, subscribe, share, comment, and let's meet again on the next video. Peace.